Tired of being broke, you need to flip or buy and hold. Clocking in and out, your 9 to 5 is getting old. JD Boom and AC Cash, they known to get the bag. You can make your own schedule, know you liking that. Time to take the next step, take your money, invest. Know you just got that check, go sign up with JTech. Yeah.
Hey, we gotta cover this stuff, man.
We got to.
It's the market right now.
It's the market.
It's the
like
crypto
we at
market.
Six Flags. It's like Six Flags.
Oh,
man.
hold on. Hey,
yeah.
market volatility.
That's
we
right.
gotta cover this, guys.
That's right.
We're gonna see if this roller coaster. We're gonna see if it's still gonna continue. Pivot Point Investors, y'all ready?
Let's do it. Let's do it.
Hi, I'm AC Cash, and this is
Jay the Technician.
and this is
JD.
Boom! And we're here on behalf of Pivot Point Investors, where we help the average investor grow his or her nest egg. And right now, it's that market, man.
It
That
is.
market is rolling. It's up and down. People getting seasick, man. I see people grabbing barf bags and stuff all over the street. It's
hard
crazy.
to stomach it, man. Hard to stomach it.
Hey, but if they get the good information, they can take it.
Hey man,
they
they
take
can. Like it stuff changes.
Yeah.
It's fluid.
It
so they
changes.
just gotta learn. You gotta develop a stomach as a trader, man. We've been
That's
at this for years, right?
You
Like,
can't
know,
get mad though. Up and down just means opportunities to make money.
always.
That's
If it ain't going up and down for me, that I can't be making no money.
That's
Yeah.
right. That's
Okay,
right.
that's day trader conversation and a swing trader conversation.
That's
Yeah.
right. That's real
So
talk.
this thing, this market, it's up and down. Everybody who at least looks at Bloomberg, CNBC, anything regarding the market, they know it's volatile. What
That's
the
right.
heck is volatile? That means it's going up and down. That means
right.
people are getting seasick. They're wondering whether to pull out now or put in now, and they're getting confused.
That's right.
So there's a lot of things that affect the market while it's showing to be volatile.
That's right.
Who could help me understand why, beginning kind of course on why the market is volatile?
Well, I'll take that. I'll take
Okay,
that one.
all
And
right.
I'll hop in first. I'll give you one idea that you may not have heard of or considered. It was interesting for me when we did the research about this. And IPOs, initial public offerings.
Okay.
So an initial public offering, company's private, company all of a sudden becomes public,
Okay.
and then you can buy it in the retail market, right?
All right.
So last year in 2020, there was only 62 companies that came to market and became IPOs. Only 62.
I got it.
Right?
All right.
And this year, because, and it's crazy to even say this number, this year in 2021, there have already been 484 companies,
484. Okay.
IPOs that come to market this year.
Okay, but man, I got a couple dollars in my pocket, and I don't know how I'm affected by the IPOs. I don't
Okay,
understand.
okay, so I'll explain. So,
Alright.
so the IPOs create additional pressure on every other stock that's already out there in the market
Okay.
because it's dumping millions and millions of additional shares of a new company, even though it's a separate company, in the same pool that we all have to choose from for stocks.
Okay.
So we all go to this one market pool, whether it's in Dow, the NASDAQ, wherever it is, we still go to this one pool.
Okay.
And so if we, have, let's just say 1,000 stocks to choose from today, and then after all this 484 companies, we got 10,000.
Now that's a big difference.
That's
So
a
now
big
I'm
difference.
it's like going to the club and it's only 2 women in there.
Yeah.
But now when you flood the market with 100 of them,
Yeah.
now the choices get a little
It's
volatile.
different.
I gotta
That's
spread out the money,
That's
buy drinks over here,
Yeah,
drinks over there.
Imagine if you had to buy 10 girls drinks instead of one girl to drink.
That's volatility.
So it makes more sense when we going dollars now.
Because you got to
Okay.
spread that same
Okay.
120 you got in your pocket. You
That's
gotta
right.
Spread
Spread
it
it
across
around, and
Yeah.
that's volatile.
Yeah.
I can understand that.
And then, but what you may not also understand is the portfolio managers that control these mutual funds, these exchange traded funds, all these, they got millions and billions of dollars.
Right.
Then they're forced because they gotta be smart, right? They gotta appear smart
Gotcha.
to their investors, right?
All
And
right.
so imagine you miss an Airbnb when it comes out as an IPO.
Okay.
And you let that one go.
Oh man.
Now, but you might have been making money over here in Microsoft and Facebook and Netflix and all
Okay.
these, but then all of a sudden you got Airbnb coming. He said, I know you're gonna put a few billion in there,
That's
a few
right.
million.
That's right. That's
So then, but imagine every time that happens, you're cutting off successful stocks. You're selling out.
Yeah. And that makes the
Yes.
tide just
Yeah.
get a little choppier again. Well,
Yeah.
that's good. I can understand that. I don't want to go too far in that. But,
Yeah.
you know, J-Tech, I've been hearing about this thing. It's called a SPAC. SPAC. Like, man, what you talking about a SPAC? What's a SPAC? You know, and they said that's been affecting the markets significantly. And I know we've been leaning on Mr. Boom, but I think we go back there to talk about what's a SPAC and how it's been affecting the market.
Yeah, so a SPAC is a special purpose acquisition company.
Okay.
And so the interesting thing about a SPAC is already a publicly traded company.
Okay.
But it's a shell company, if you will.
Yeah.
With billions of dollars in it, right? It's already public, and it'll specialize in going and purchasing private companies. And then just by default of it being public, that private company it purchases becomes public as well.
Right. And the SEC doesn't like these SPACs, and
No.
they got upset, and they huffed and puffed, and they're blowing the house of SPAC down.
Absolutely.
They're cracking down on SPAC.
Absolutely.
How come? Why they cracking down on SPAC?
Well, just one reason I just gave, if you think about it, they want IPOs to go through a process to come to the marketplace.
Right.
Because you've got all these checks and balances, you've got all these series of forms that have to be filed. And so a company like a JP Morgan Chase, a Goldman Sachs and Merrill Lynch, these big investment banks, they have to do a lot of work to bring a company to the market.
And the SPACs are
And the
trying to
SPACs
go around the back door.
There we go.
Oh,
Well, I mean, I won't say the back door.
Not the back
but-
door, side door.
Well, I look at it more like, you know, when we was raised on the block. And to me, it just looks like a situation where we're just mad because someone found a way to go from door to door and just buy out the whole block before anybody could do anything.
Okay.
So that's all that to me was happening, is just they're mad because these guys found a way to finally make an opportunity to take a company without having to split it with nobody else. They just kept it for themselves.
Okay.
I mean, they had an issue when we was doing it with the weed. Now it's okay though, right? So now we all got to share the weed.
Back with the weed.
I'm just saying though, man. I'm just saying, man. Come on. I'm just saying, man.
Can you not agree they totally changing the system and the game the way it's played?
But they've been doing it for so long. Why they mad about it now?
When we talk about
SEC
SPACs,
wanna
that's
keep
been
it
a special. They've been taking a whole lot of money versus just somebody that get a little bit of money, pull it together, and make purchases. These SPACs have been getting billions of dollars and calling themselves, hey, we're out here. Just keep loaning us and we'll determine what we're going to invest in later. And the second important part about that with the SPACs is they take the money and, you know, the guy who's super smart to put it together, he's taking so much money off the top. Off the top. They can bomb tomorrow. He took his money.
He got his cut.
And he's out.
Yeah.
So that's why the SEC had to step
they
in.
got to protect the consumer. That's like one of their chief responsibilities, enforcement.
Right.
So they
Securities
can't.
and exchange.
No, protect the consumers and line up their own pockets. Because in this situation, they weren't protecting no consumers because, like I was telling everybody, to me, only thing the SPACs was doing was keeping certain companies from going public by keeping all the money for themselves. So you really couldn't hurt the little man because the little man couldn't get in.
Right,
You mad if you hurt the big man because the big man ain't getting that bread from running it through that IPO process.
Right,
That's all I'm saying.
Well, either way,
they greedy.
Either way,
The weed man, they took the weed man.
The cards are on the table, and the volatility continues.
That's right.
And you know, I've been hearing everybody got a little more money in their pocket. They've been keeping it. And what have they been doing with their money? What have they been doing? If they're not in this roller coaster, they've been what? Saving. That's a crazy word these days. Saving.
They coined pandemic savings. They coined it.
There you go. So it's like that extra 15 pounds, the pandemic weight. Now they got pandemic savings.
I mean, this opened up a lot of people's eyes. You know, we used to hear about those nest eggs. They say, oh, save 3 months, save 6 months. Man, this pandemic went over a year. So, I mean, even some of the best savers got bled out. And that was rough. I mean, a lot of people I know, their savings account is gone. So they really trying to...
So that's the two sides of it. Some people been spending, and then there's a whole lot of people that have been saving. Saving. But to keep it moving, we got to cover one other area when we talk about the market volatility right now. And you know, we're in the middle part of the year, and the volatility continues. and this crypto deal, this whole crypto, the Bitcoin, the Ethereum, the Litecoin, all these coins, everything's moving, but there's no real science, but there are some underlying things that have been pushing the market for the volatility. So what has happened in the crypto world to continue to add to the volatility?
Well, I mean, first and foremost, I just want to make sure that everybody knows this is the most simplistic thing you could do as a brand new crypto trader.
Okay.
Never marginalize money. Please, whatever you do.
I don't know what that means, man.
Basically, it is. Don't borrow no bread. Whatever you want to invest in this,
when we talk about in the crypto market,
buy that crypto, own that coin. Own it. Don't just borrow off of it. Don't grab a dividend side of it or an ETFs, because when you start playing with them little worlds, the way this volatility moves in crypto, it is bankrupting people almost immediately, because when the account don't handle that movement, it's gonna cut your trade off.
All right, and so let's look at one case scenario is when we talk about Bitcoin. What was the high on the Bitcoin recently?
$63,844.
$44. You don't know the cents, huh?
12.
He still remembers.
Man, I love it, man. I love it.
And so now, without being exact, we're talking a matter of a month. It's in the mid-30s.
It was like 37, 38.
It's bottomed out low was actually a 30,000 even, and a lot of people was actually skeptical about that, because usually that doesn't happen in the market with clean zeros. But like I told somebody, that will only happen if someone had a trade there of extreme significant buying pressure. Means someone was waiting for Bitcoin to somewhere around that line reach that number, and they had a couple hundreds of millions to close to billions of dollars ready to buy.
And so if I was in it, if I felt good because it's going to go to 100,000 and I'm all in, and I did it on margin or something, what would happen to me in that scenario?
In that scenario, you'd have already been out of the trade. I mean, there were people who got into Dogecoin when Elon announced it during his SNL.
See, hey, you can tell it's his buddy. Elon.
Man, no,
I'm about first name Elon Musk.
Hey, man, they just made a new crypto coin against him called Stop Elon. That's the new coin out there.
Oh, wow.
Yeah, so, but he came out, the market went as high as 74 cents. If you jumped in at 74 cents, you'd be dead today.
Right.
Because Dogecoin had reached a pivotal low of 26 cents in less than a week. That was catastrophic. I mean, for most people's accounts, that was 66%.
It's back to about 33
It's
now.
about 33, 30, but you know,
that's if they didn't jump off the cliff already.
That's
if they hung in
there.
So,
you know, it's just, so you gotta think to yourself, man, I just seen 28 cents like 2 weeks ago. So when you see something move like this, you really do gotta determine if that's the kind of market you really wanna be dealing with, or if that is the kind of investment that you don't need to pay that kind of attention to. Because if it's gonna move like that,
but Cash, to answer your question specifically, you said what would happen in a margin situation.
Right.
What they would get in most cases if the trade wasn't stopped, like what J-Tech is saying, is they get a margin call.
You get a margin call. Man, you know, when you were young, you get called to the principal office. And that wasn't a good call. In a margin call, what happens? I'm sitting riding high at $64,000. I got a coin or two or three Bitcoin. I'm rolling. And now we're racing to the bottom. We're passing 50. We're going past 40. Now we're in the mid 30s. And what's this margin call thing? What happens?
It's a nightmare-based scenario. Basically, it's that phone call. Most brokers use the 80-20 system. So pretty much they call you to say 80% of your account has been wiped out. We stopped you at the 20% mark, some are 25% mark, said we just had to shut it down. It was too volatile, it was too fast, and we want to protect some of your money, but also at the same time, it is their belief that maybe you didn't see what happened. Or maybe your stop didn't work. So it's, don't let them lie to you though. It's not just for your protection, it's for them too, because if it negatives out all the way to the ground, they have no way of collecting money from you. So they do have to stop it where there's some money still in there, because they still got to charge you commission, they got to charge you because you got out the trade.
They stop it. What's that
mean?
They
stop it and they ask you to add money to your
account.
That is a margin call. So whether it's an alert, whether it's an email, whether it's
quick, easy nightmare. If you had $1,000 in crypto, it fell to $200, you getting a margin call. By the time they finish charging you fees, plus there's a margin call penalty, that $200 probably don't even exist no more. So they're calling you to say, hey, if you still want to trade, you need to add money back to the account so you go back to trade.
All right. So that's a volatile situation. And that's what happens when markets rise and fall rapidly, especially in a short period of time. But we won't go too far. We baked it. We're doing okay.
We did enough. We gave a little flavor for the day.
So we understand there's market volatility right now. We had a show a few weeks ago. We talked about buyer beware.
Absolutely.
Because things were at a high. And hopefully we know our guys, our Pivot Point ladies and gentlemen have followed that advice and did what we talked about doing what? Pulling the chips off the table.
Yeah.
They might have done some of that. So hey, buyer beware. It's a dog eat dog world out there, but there are fortunes being made just as they can be fortunes being
lost.
That's a bad
But
word.
see, that's when I start feeling like Nostradamus, man. Like New Age, like just Nostradamus. Like we just the future. We see the future. We just know. We just giving it to them.
Okay,
man.
so they appreciate it. I think they can feel it.
Man, I hope so.
That's enough for one session. It's been a great day. Hey, continue investing. Continue getting your knowledge, whether it's crypto, whether it's real estate, whether it's stocks. Hey, get your information. Get that good information. And here, on behalf of Pivot Point Investors, we say get your information.
Absolutely.
Okay. So,
absolutely.
Hey, we're putting a pin in this one. This is talking about market volatility. Will the roller coaster continue? And the consensus is yes, the roller coaster ride will continue. So stay smart with your chips out there. So hey, that's it for us. On behalf of me, AC Cash, this is
Jay the Technician.
And this is
JD.
Boom. And on behalf of Pivot Point Investor, guys, stay smart and keep rubbing that ball, seeing what's happening, what's in the future, what's gonna happen. Do we know? More money.
Always.
Stay smart, guys.